Good morning, traders. This will be a very quick trader bite as I'm pressed in time here to take the kids to school. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. It's Tuesday, the 24th of March, 2015 at 7:07 a.m. Look at the overnight. The U.S. dollar drives price action once again this morning as the index touches lows, hit in the wake of last week's FOMC statement. The euro-U.S. dollar tests $1.10, quite the climb from $1.04. Several Fed speakers hit the tape overnight, including Fisher and Williams, who said they expect a hike this year and the U.S. economy can handle a strong U.S. dollar. The Hang Seng and Shanghai Comp both fell in the wake of a poor Chinese HSBC manufacturing PMI release, with the headline contracting to an 11-month low, 49.2 versus 50.5 expected, and the 50 mark is the indicator of whether it's expanding or contracting. So, other than that, just looking ahead at 8:45, 15 minutes after the open, 8:45 Central, all times are Central. U.S. manufacturing PMI expected at 54.6. 54.6 at 9 o'clock, a half hour after the open. We have U.S. new home sales expecting 467,000. Also at 9 o'clock, we have Richmond Fed expecting 3. And then also looks like, just different components of the Richmond Fed. At 10:30, which I have not seen before, U.S. Cleveland Fed CPI month on month. Previous is 0.2. After the pit close, we're going to get U.S. API crude oil inventories. And then as far as speakers, at 9:30 Central, we have ECB's Neuer. At 10 Central, we have ECB's Costa speaking to Parliament. And then as far as note auctions, we have a noon 26 billion 2-year note auction. Okay? Let's take a look at what we have as far as the technical picture. Yesterday's Trader Bite had covered the idea that the open is hard to predict, not a strong hypo one way or the other. But also I spoke about the fact that the structure below us is pretty weak and that I expected us to turn, to roll over, and test lower at some point. The overall trend is still strong on the upside, but still we have a gap down and a gap up, and the market unable to take out the prior day's high. The prior day's high, which was Friday, it's 106.75. Yesterday, one ticked. It was not a failed auction, however. It one ticked and really stood there for a while. You could see it here. We pushed a 2107. Then we created this sideways structure, this balanced structure. Then we tried 2106.75, and then it rolled over back to the mid. Fought at the mid all day. Pretty ugly profile until it broke lower. A lot of compression yesterday. And then it finally broke lower towards yesterday's overnight low, which was the target below 2093 and a quarter. For those of you who listen to me on daytradingradio.com, by the time I left the show, I did say that look out below, expecting 2093 and a quarter to be tested. I missed that by 4 ticks. 2094 quarter was the low, but it did roll over. Overall, on the overnight session, completely sideways in the Asian session. I was here and listening when the China PMI number came out and missed. Not much happened. It continued to trade sideways, and then the European session tested lower and pushed towards the highs. So we're trading up against near highs, 2099 versus 2101, and we're taking some of this back. So we're in balance essentially. This is completely balanced behavior, and so I have created a microcomposite balance zone here of the last 2 days, and you can see that the most valuable price in this area is 2101, which happens to be the overnight high. This is going to likely play out to be a magnet here. Currently at 7:12 a.m. the market's trading 20.99 even, 20.99 even, and it's just holding steady. We're in the stem of yesterday's selling. You can see yesterday's selling here. This is not, even though technically market profilers will call this a P-shaped profile, which is a short squeeze. I want to caution you to just arrive at these conclusions without looking at context. The context is we spent most of the morning trading up here and we broke lower. That is not a short squeeze. So I would not read that profile as a short squeeze. I would look at this profile as reversing last Friday's action, was unable to get into the prior low. So today, again, second day in a row, we have a situation where we don't have a higher probability of one thing occurring over another on the open. Of course, in the long run, there's a higher probability of going higher than lower because of the trend that we're in. I'm still watching the key levels below that were put in this month. We're still above the 2077. We're still above the key areas, but overall we still have a gap beneath us, and we're holding steady up here. I feel like I believe that this is pretty much sideways action that's going to resolve itself over the next couple of days. We have a very sharp point of control on the MC, very unusual action here. You can see that it was created on Friday. A lot traded at this 2101. Looks to me it may be a remnant of the expiration last Friday, but overall a very coordinated effort to hold prices up here that has failed. This morning I don't have a very clear hypo for you, unfortunately. It's another day of watching to see which side takes control and manages to push the action, and then that's the side we trade from until the mid is taken out. So overall, this morning it looks like it's opening. It's opening somewhere in this area. I don't know what it'll do in the next hour and 15 minutes when it opens. But essentially today is another day of just sitting steady and waiting patiently for one side to take control. This was a beautiful rollover here that we had yesterday. Another attempt at the high, and then once it breached the mid, I had to wait, and then a retest of the mid, a failure pattern, and there it is. It slides right through. A very easy hold on that. Took all day for that to develop. So I'm expecting it to be another day like that. This is fairly common right after expiration. Right after expiration, and given where we are in the overall profile in the overall market, it's a tough call. I'm going to, I posted levels on Day Trading Radio yesterday, and I'm going to share them here real quick. It's in a form of an image that I sent. So we are at in the 2103 area, which was the MCHVN. 2101 is now a brand new MC point of control. Again, all of these terms can be found at futurestrader71.com/glossary. But it's above 2110. Again, we have blue skies. The key measured move above is at 2120. There's a cluster there, and then there's a much bigger cluster of about 4 measured moves at 2173 above if we break higher. Down below, 93, 75, and 81 are the key numbers within range. Other than that, we're inside of the FOMC again. The expectation still for me over the next couple of days is to ride this down into this this profile and then potentially back to the scene of the crime, the SOC right down here at 2062 and a quarter, 2062.50. I'm not saying that that'll happen today, but there is weakness below, and I'll continue to trade into that weakness. One last thing I wanted to show you, some really nifty things happening with IRT. This is a study that was created by one of Stage 5's best, that shows 1,030 days being tested, how many days opened in range, how many days opened out of range, and for any given gap size, gap being defined as the market opening outside of the prior day's range, not a closing gap, but a gap outside. And then we tested for the touch of the prior day's close. For example, this is a 1 point gap above or below the prior day's range, and what we get is out of 202 gaps up, 79 filled. So that's a 60% probability that it would not fill. That sort of statistic. This ties in with last Thursday's webinar, and I think it's worth watching. I posted it yesterday on Twitter. Just go to my Twitter, Futures Trader 71. And scroll back and you'll see the recording of that webinar. There's plenty of stuff here. I also posted a chart last night, which will be reposted, showing those stats broken down by gap size. Important stuff. We trade from probabilities, and that's just part of the a piece of the puzzle. Anyway, I know I'm not leaving you with a hypo. Overall, this is one of those days where it's too far from the open because I have to pre-record this, but this is one of those days where we have to wait to see which side fails first, and that's where we trade from. Good luck today, and I'll catch you tomorrow for a live Trader Bite. Should be back. My schedule should be back to normal.